Joe Cusick of the Cusick Group joins me now to talk about several stocks, starting with Morgan Stanley.
Yeah.
Hello to you. What's going on?
Not much, same old, same old. Little up, little down.
A little up, little down.
Yeah, but you know what? Yeah, Morgan Stanley, the financials. We are obviously been talking about them since the interest rate decision and the continuation of what's going to go on with rates. And with that being said, yesterday I saw some interesting activity in Morgan. I actually saw 5,000 of the October 33 calls trade, right around 33 cents. Stock was trading around 31.91, out of the money. Angie, these are these premium plays that I quite often like to bring up. What I mean by premium plays is that someone's taking an opportunity to sell potentially an out of the money call, take in some premium, offset their cost basis on a particular long side of the trade, whether it's a long option that's deeper in the money or stock in the form of a covered right.
Let's take a look at tech now, starting with BlackBerry. We had some big news this week with BlackBerry ditching its hardware business. I know I know you had your BlackBerry.
I know. I do. I miss it. It was the most durable piece of hardware I've ever had in my life. I used to be able to throw that against the wall on good days, and it still worked.
Wow.
But yeah, BlackBerry unfortunately is no longer going to be producing their handsets. They're going to outsource that, if anything. But it's an interesting story. BlackBerry always has been the security expert. Everyone always looked at BlackBerry on the corporate side as the most secure network for being able to transact communications. And so we're going to keep an eye on that, see what parts of the business are going to seem attractive if in fact BlackBerry does start to decide to make some moves. What I did see though is that there were about 1,500 to 1,800 of the January $8 calls that traded, but really they just need the stock to get over 874 before they're break even. They have time.
Okay, let's move on to Fitbit.
Yeah.
So Fitbit could go either way.
Yeah.
It could be the greatest holiday ever for this company, and it could be a big loser.
Right.
So the stock right now, you look at the low price in the stock,
Yep.
but the options market is predicting this stock could head higher.
Yeah.
Do you buy it?
I think right now what you want to do with Fitbit is you want to trade it. I don't think that this is an investment at this stage, and especially since before the holiday season begins, they have earnings coming out, and we're getting into that cycle on the 7th of November. That's the binary event that I'm playing right now. If I'm going to look at Fitbit, I'm going to look at something that's going to give me time. In other words, if I'm going to put on a strategy, whether I'm bullish or bearish, I'm going to put it out longer term. Now, I did see some longer term trade yesterday, 12,000 of the January 17 calls traded. Now, the stock was down huge yesterday, around $1.30, and that was on news that there was a downgrade from Pacific Crest.
Oh, they're saying sell it.
Yeah, well,
they're telling investors sell it.
That's fine, and let them do that. You do your own due diligence and take advantage of the volatility out there.
Right.
How do you play this? Right now, if you're bullish, what I would be doing is looking for out of the money puts to potentially sell. What I mean is somewhere around that, like 12.5 to $13 level. That's where you want to start selling some puts. If the market does pull back down, even on some more negative news about Fitbit, you're going to get put the stock, but at a lower price than if you're buying it out right now.
Thank you so much, Joe.
You bet.